Welcome to Tradenet. My name is Meir Barak, and in these videos I'm going to teach you the basics of day trading. These lessons are hopefully going to provide you a reliable and consistent method to join this wonderful world of trading.
Welcome to Lesson 4. Lesson 4 is about market indicators, probably the most important intraday tool for day trading. Just before we get started, if you would like to trade live with me, you are invited to click here and take my 14-day free trading room trial. Also, in order to practice or trade, you will need a trading account. If you would like to open a Colmex account, Colmex will pay for my trading room membership fee. The impact of market indicators is huge. When we're trading, we're watching the chart of the stock that we're trading, but we are also watching the chart of market indicators in order to determine, for example, our direction, long or short, our trading quantity, regular quantity, smaller quantity, or maybe higher quantity. And we are also watching it in order to manage the trade and to determine entry and exit points. The most important indicator is the Standard & Poor's 500. The S&P 500 index is the 500 largest companies in the US. The market barometer, the ETF, is called SPY or the SPY. It is an important, extremely important indicator because it is used by institutional buyers. It is viewed on the daily chart and on the intraday chart at 5-minute chart resolution. There's another important indicator, which is the NASDAQ Index. And the NASDAQ Index that we use is what we call the Qs, the QQQ, or the NASDAQ 100. It is very important because it is also used by institutional buyers. However, it is less important than the S&P 500. It is also being viewed at 5-minute chart resolution. Let's look at some charts. On the top we can see the SPY, which is a symbol for the S&P 500 ETF. So in fact we can see that the S&P 500 is trending higher. These are 5-minute candlesticks, Japanese candlesticks, which we will learn about in the next lesson. On the bottom we can see the symbol V, which stands for Visa. And as you can see, Visa is trending higher. Now I claim the following. The S&P 500 will make the first move and then Visa will follow. It is a little bit hard to see it here, but if you will watch it live throughout the day, you will be absolutely amazed. Now the reason is very simple. Institutional traders are allowed to buy stocks only when the S&P 500 makes a move, which means if the S&P 500, for example, moves up, they will be allowed to buy Visa. Now, of course, there are some who are supposed to be buying throughout the day. Other traders are supposed to be selling throughout the day. So if the S&P 500 would move up, some institutional traders will buy. On the other hand, when the S&P 500 moves down, you will see some other institutional traders allowed at that time to sell. So I can show you several examples, like for example, see the S&P 500 trending higher here. You will see the same here at Visa. If you want to see the S&P 500 right over here dropping down just a little bit, it will reflect in Visa, and it will always be after the S&P made the move. Now I can show you several other examples. For example, take a look at here. Here's the red candle. You can see the same red candle here. Take a look at this topping over here, red candle, and the same over here. Take a look at Visa moving up. So did Visa finally decide that it wants to move higher? No, in fact, it started here at the S&P 500. And again, this is something that you will have to see live. Traders, what I'm trying to say here is that in fact, you have the crystal ball of the market, which is the S&P 500, and it will make the first move. The stock that we are trading, since 80% of the volume comes from institutional traders, will follow. Let's see another example. We can see here at the bottom the chart of Apple. Now at first look, it may seem to you that Apple is not moving like the S&P 500, but in fact it does. Take a look, for example, Apple moving down here at the beginning of the trading day. It stopped and then started moving higher. So did Apple finally decide to stop moving down? Not quite. Take a look at the S&P 500. This is exactly where the S&P started moving higher. Now this green candle came just before Apple touched a new low over here. So 5 minutes later, there is always some delay, Apple starts moving. So if you see the S&P moving higher right over here, you can in fact anticipate that Apple will do the same, which it did. Now, throughout the day, if you take a look at this S&P 500 here moving down, then you will see the same in Apple. Take a look at this red candle over here, you will see the same with Apple. Take a look at this topping here, you will see the same with Apple. So if you take a good look in between the S&P and Apple, they will move the same way. So in fact, it doesn't really matter which stock you're trading. If you're trading Apple or you're trading Visa, you should be watching at the same time the S&P 500. Because the move that your stock will be making in the next few seconds or minutes is all dependent on the S&P 500. The S&P 500 will make the first move, then your stock will follow. And this is extremely important for you as a trader to understand this fact. Thank you for watching my video, and again, if you want to start trading, I highly recommend that you join our live trading room and trade live with me. It is a free trial of 14 days. And if you don't already have a trading account and you want to open a Colmex account, well, Colmex will pay for my trading room. Again, thank you for watching and see you in the next lesson.